Now joined here in the studio by Aly Khan, a stock market analyst based in Nairobi. He also runs a website called rich.co.ke. Thank you very much for being here.
Thank you for
Thanks for coming into Al Jazeera. So a roller coaster ride here.
Yep.
Markets acting very irrationally. No one knows, no one seems to know anyway what's going to happen. How long do you predict this uncertainty will continue?
I think we're in a period of intense volatility, and I think we're going to be in it for some time to come. What I'm noticing now is what was previously right on the periphery. You know, it was a problem in southern Europe, is suddenly spreading. What was a problem in the pigs, Portugal, Italy, Greece, and Spain, suddenly is now affecting France. And in the US, my takeaway from what we've been watching recently is that really they got no more magic tricks left. I know they're talking about QE3, but I think QE3 will be a Titanic.
But is this a continuation, Ali, of the crisis in 2008
Yes,
that started with the collapse of Lehman Brothers, or is this a whole new crisis altogether?
What they did in 2008 was they threw bucket loads of funny money at the problem. And we all suspended our disbelief and said, you know what, it looks all right. And now it's come back twice as badly. And I think this time it's going to be much, much more intractable and much more difficult to deal with. So yes, it is. It's the old problem, it's come back, and this time I don't know what we're going to throw at it.
But are the fundamentals of the global economy that bad, or is it the fear that's causing the uncertainty?
I think in part the fundamentals of the Western economies are not good, and they have not improved in the last 2 years. The improvement was what I would call a dead cat bounce. Dead cats don't bounce very far. So this bounced, we got a little bit excited, and we're back where we started. I think we're watching the world turn from Washington towards Beijing, and we're in this process.
Right.
And essentially those Western economies have got to downsize. They've got to get back to honest economics, honest money, and I don't think they're yet ready to bite the bullet. So I would say today, for example, we saw the Asian markets were not down as dramatically as the Dow Jones.
Right.
We're going to get some kind of disconnection going on. I think you're going to see those markets outperform. But essentially, it's a very nervous time.
Right.
It's catching a falling knife. If you're trading the Dow Jones, really, it's a crapshoot right now.
Right. I mean, the stocks certainly taking a beating last week and also this week. But, you know, markets, for the vast majority of people, are remote.
Yes.
What does this really mean as the stocks go down? What does it mean for ordinary people? What does it mean for their jobs, their pensions, their...
Absolutely.
You know, what does it mean in layman terms, basically,
well,
for us?
In layman terms, most of us, without knowing it, have our investments in the equity market via our pension funds and so forth. So when the value of stocks goes down, the amount you're going to receive for your old age goes down commensurately. And there comes a point when your pension will not keep you in your old age. So you get all kinds of problems. You've got to work for longer. You might have to work forever, potentially. You know, you're not going to be able to sail off into the sunset. That's one key problem. And then just generally, structurally, it means that a lot of people go underwater because we've all got in this habit of the last 30, 40 years of investing in equities. You know, we've been told invest in equities for the long term, But right now, if I was heavily invested in the US or the UK, I'd be very worried.
Okay. Thank you very much, Ali, for your insight. Of course, we'll be looking to hear from you later on in the program when we start talking about gold and people rushing to buy gold now. Thank you.
Thank you.